on a firm footing for the equity markets as we skirt around the 14,480 mark in trade. We're up a solid 500 points on the Sensex, and the banks are really powering through. Add to that, you've got names like Reliance Industries as well as UPL, Asian Paints, Bajaj Auto lending a helping hand. Let's connect with Pankaj Murarka as well on the show. And Pankaj, wanted to get in your take as to how you've looked at the overall earnings trajectory so far that has kicked in. What have you made of the kind of numbers this week? We've got, nearly 33% of the Nifty weightage. But so far, how have you read into quarterly earnings?
One, the numbers so far have been pretty decent. There have been some minor blips here and there, but broadly they have been pretty healthy and very much in line with expectation. In fact, there have been some positive surprise. For example, ICICI Bank surprised big time over the weekend in terms of the numbers they reported, where the incremental NPAs were much lower and the provisioning was also much lower, and they've guided for a very healthy outlook going forward into the next year. Likewise, we've seen pretty healthy set of numbers even from IT companies, including, more importantly, their guidance for next year. So I think so far the numbers have been pretty decent. We're looking for a very healthy earnings season. Probably this quarter, Nifty companies should do something like about 30% kind of a growth in profits on a Y-on-Y basis. Part of it is also because of low base last year, because COVID disruption did impact last year's March quarter's numbers. But from here on, I think we're looking to build on in terms of earnings growth going into the next year.
Okay, fair enough. In the terms of the overall momentum in the markets as well, do you believe that we are likely to see this sort of a trajectory continue? And how have you read into the optimism in the markets despite what we've been thrown at with respect to the COVID situation?
So as far as COVID is concerned, obviously the second wave has turned out to be far more vicious for India. But I think that now probably all of us have a much better understanding of the nature of the virus. The virus has its own evolution curve. Some of the other economies, if you look at, are actually going through the fourth wave. So the virus will have its own evolution where it will go through a cyclical process, and probably post the second wave, we'll have the third and fourth wave as well. Japan currently is undergoing the fourth wave. It's all about our ability to deal with it more effectively. And I think probably India could have done a far better job in dealing with the second wave. But I think all of us realize and understand this, that probably this wave should peak out sometime in the next week to 10 days, and probably then in another 4 weeks' time, we should hit some sort of a normalization. I think the final answer to this is essentially in terms of how fast we can achieve herd immunity, and which effectively means we have to get to a stage where we would have vaccinated about 65% of our population. So I think, but markets are looking beyond this next 4 weeks when they're taking a view on markets, because markets realizing that second wave is just a passing phase. And in context of that, markets are looking very closely to fundamentals and slightly more longer term fundamentals. In respect to earnings that you touched upon, Avan, I must say that after a very long period of time, I feel very excited about earnings growth across corporate India and for the leading companies in the Nifty. Last 4 years has been a period for India where earnings growth has been absolutely missing, and we've had lackluster earnings growth of about 7% at the Nifty level. And over the next 2 years, we are looking at something like a 22% CAGR earnings growth for the Nifty, which effectively means Nifty earnings will rise by, in absolute terms, by 50% over the next 2 years. And that is what makes us very bullish on markets from 2 to 3 year time horizon.
Stay with us. Just want to quickly address a piece of news. Remember, earlier this morning, there was news out on Mphasis that Blackstone has made an open offer to acquire a 26% stake in Mphasis, which makes the open offer coming in at 1,677 rupees per share. And it's a total consideration of 8,260 odd crore rupees. The valuation, of course, so far are pretty large. So let me quickly welcome on board Rahul Bhasin then, and chat a little bit more about this recent development. Rahul, hi, afternoon. Given that your fund has investments in Mphasis since a very long time, what is your view on this announcement coming in from Blackstone picking up a majority stake in Mphasis?
Sonali, for full disclosure, we had investments from 1998 till 2014. So we've not been investors for a very long time in the company.
Sure. But nonetheless, what is it that you're making of this valuation put forth by Blackstone? I mean, the open offer coming in at 1,677 rupees per share, total consideration makes it to a sizable 8,260 crore rupees.
Look, I mean, if you look at it simplistically, it's a company which generates 1,800 crores of cash, probably likely to grow by about 15-20% this year. On top of that, the market cap's about 33,000 crores. So on a yield basis itself, it's 6-7%, and you have growth. Given the tailwinds in the entire sector, I mean, if you think of things like migration to cloud, etc., it's massive. Two, if you look at the fact is that from everything that's happening, it's actually what I call a change of guard or a change of fund within the Blackstone group itself. The dominant fund is likely to be the more later fund. And whether, one thinks from the outside that large institution is the same, really people aligned to making that fund better will have more incentives to move more work towards Mphasis. So I think, all in all, I think it's a good thing from everybody's perspective. It's a win-win from everybody's perspective.
Yeah, and the management also, Rahul, was fairly bullish on the overall revenue growth momentum. And in the recent conference call, they talked about the opportunity following through, and they said that there is massive opportunity in the, for the IT sector, including cloud migration. Minority investors like University of California as well have large IT spends. They itself can become, big investors. This is what they categorically mentioned in the conference call as well. Your view on the opportunity ahead, in particular for Mphasis and at large the Indian IT sector?
Look, to my mind, any good company should develop its sales force and its go-to-market strategy in a way that is not dependent upon its investors. Right? I mean, it should be independent of the two. Having said that, like I said, I mean, Blackstone itself is a company which is extremely acquisitive. Its AUMs have been growing. So they have more and more new companies in their portfolio. And their global footprint has been increasing. So I think that opportunity set and that introduction and that familiarity will definitely help them open doors. And as long as they can keep their value proposition going, it's likely to be very beneficial for the employees, the company, the shareholders, Blackstone, and the co-investors. If you ask me personally, is it likely that they will be able to mine the other investments of California Teachers or ADIA? I find that a little, difficult, and because these organizations are not structured that way, and the incentive structures will not easily facilitate that. I mean, it won't be a demerit or a negative mark, but it's not something which will come easily to the table. But within Blackstone's own portfolio, I think that there would be plenty of opportunity. Two, if you think of the entire worldwide today, I mean, everything is getting digital, right? Earlier, having a digital strategy was an option. Now, if you don't have one, I mean, you really don't have a business case in the medium term, if not the short term. And therefore, I think the imperative for everyone is to move into cloud solutions, which then produces its own challenges, right? I mean, when you have to talk about improving your UI versus the investor base, which again creates opportunities, then there's this whole issue of wrapping security around all of these applications and this interface, which again has its own set of opportunities. So I think the opportunity set for IT is expanding and growing, and will continue to do so. So I think that the entire Indian ecosystem, which feeds into that, services that, has more and more opportunity. Now, there is, of course, disruption within the industry itself, because with a lot of artificial intelligence solutions, a lot of the software programming, I mean, the same thing that needed 100 programmers 5 years to do, now maybe can be done with 5 programmers in, a few months. So there is this productivity jump. And just like the IT industry is eating up jobs and this thing in a lot of other industries, they're doing it for themselves too. And I think that, the businesses which are cognizant of that, adopt those technologies, drive that productivity, will continue to do well. I think Mphasis had a culture of doing that in the past. I hope that they continue to do that. And as long as that is still in place, I think they will continue to prosper and do well. And I wish Mphasis and Blackstone all the best for this.
Okay, Rahul, thanks very much for sharing with us your outlook on what you make of this news with respect to Mphasis and the deal, the controlling stake coming in. Okay, let's get in a chart check as well then. And Kunal, what's the reading? Because there has been quite a bit of flip-flop with respect to this news. Now that we have some more certainty with respect to this deal, the stock is quoting at about 1730. Where to from here?
Yes, Avan, I think the last couple of weeks have been a bit, I would say, choppy for Mphasis. But the way the stock has recovered from 600 to 1800 in this last 1 year, 12 months, 13 months, I think has been just phenomenal. And that's the point which I was emphasizing time and again, that the mid-cap IT stocks have apparently done much more better than the large-cap IT stocks in terms of returns. There is more traction of trends into these names. Whenever you see the IT index turning around, it's not that just the large-cap ones are the ones which are moving up first, and then after the consolidations, mid-caps tend to do well. I think the mid-caps have apparently done exceptionally well, and they seem to be getting in line or at least outperforming the large cap peers. For Mphasis as well, I think at 1730, it's still a good buy and dips candidate. The chart patterns are quite strong. It's just that the indicators are going into a mode of a consolidation, which is why the prices are unable to break past above every short-term rally which you see into the prices. So those marginal rallies are not getting converted into trends. That's predominantly because of the mild weakness which is coming across in the indicators. That's a short-term phenomena. Once that settles out, I believe Mphasis could probably get back into line and break past about that 1800 mark and start or rather continue the uptrend which it has been going through in the last 12-13 months.
Pankaj, wanted to get in your take as to how you're looking at the entire defenses basket. Just earlier this morning, we were having an interaction with a spokesperson from Bank of America talking about how at a time like this, the defensive tilt is going to augur well. And that's a space that can be looked at as a long-term opportunity for investors at a time like this. Where do you stand when it comes to defensives?
Well, obviously we've seen a lot of these businesses, when you call defensive, be it IT services or healthcare, they've been extremely resilient in the last 12 months. We've seen in the middle of the worst of the crisis that the world has been seeing, these companies have continued to grow and delivered growth. And in fact, some of these businesses have seen acceleration in our growth. But having said that, our portfolios are more biased towards consumer discretionary and the unlock stories, because we believe that if you go by experience, wherever economies have achieved meaningful level of vaccinations, be it in US or in UK or some of the smaller economies like Israel, and as economies are opening up, we are seeing strong resurgence in consumer demand and a very strong growth momentum coming back. And our view is that we'll see something similar happening to India as well once we get through this, phase 2 of the COVID wave. So our view is that the growth in the economy and the underlying resurgence in demand will actually surprise us in the second half of this year. So we are more positive or inclined on companies and businesses, which have to do with more of a discretionary spends rather than just being defensive.
So that's quite interesting. Pankaj, what are you betting on within this entire space?
So, everything right from, we like autos, so within autos, we like the commercial vehicle segment. We think that the sector can do a 40% CAGR growth over the next 2 to 3 years, because where the sector stands, the volumes are down by about almost 60% from the peak we achieved in 2019. And as economies open up, we'll see a strong rebound in demand for commercial vehicles. Likewise, we are very positive on consumer discretionaries across all the segments, be it retail or retail consumption, be it hotels or other segments of consumer discretionary, including apparel manufacturers or consumer durables.
That's quite interesting. Kunal, within the reopen trade, do you find any merit and opportunities to go long at this juncture?
So I think one of the stocks which you've been discussing time and again, I think PVR, I think that stock looks attractive to me. Aisha, at least at those 1,000 odd levels where the stock tested last week, it was good risk reward buy at those levels. So if the stock happens to maybe come back to those kind of levels again, say sometime during the course of this week or next week, I think that could be good enough level to buy again. Even Indian hotels now, the stock I remember clearly was I think at 60 rupees or 65 rupees. Almost at the March 2020 lows, went up to as much as 125, 130 levels, and from there on came back to sub 100 levels. So these are classical pullback rallies which you see into the stock prices after rallying up more than 2x. The stock tends to correct and retrace at least 50% of those gains, and those becomes good risk reward levels to enter. So I think if Indian hotels at 100 levels or 105 levels where it's currently trading, I think also poses a good level to enter. So is the case with the other peers like Lemon Tree, etc. as well. So many of these stocks have come back to their strong long-term moving averages. The risk reward is also in favor into these names. Now I think it's a matter of, or it's a question of time. So one of the puzzles which gets solved is the price or the risk reward levels which you enter at. But the other factor is in terms of patience and in terms of time. So for someone who has a time horizon of at least 1 year plus, then I believe the risk reward is in strong favor in entering into these names at current levels. Indian Hotel specifically, I would look out for at least a 135 to 140 as a near-term target for the stock. And for PVR, I think the stock over the next couple of years, I would probably be of the belief should come back to at least a 1600 to 1800 kind of levels.
Just looking at that reopen trade, Pankaj, the consensus is that within the hospitality sector, given its dominance within the space as a whole, the strong brand equity, the diversified portfolio, that Indian Hotels is one of the best placed stocks within this space. Would you concur with that? And how are you looking at the hospitality, aviation industry?
So we like all of these sectors. We're extremely bullish on these sectors. As a matter of disclosure, we have ownership in Indian Hotels, and we're extremely bullish on the name from a slightly medium to longer term perspective. Other interesting factor is, if you look at all of these sectors, be it hospitality, be it the retail sector, the downturn and the COVID-induced lockdown and the has been so vicious that it has had a very significant impact on weaker businesses. So in each of these sectors, be it hotel or aviation or retail players, we are seeing massive consolidation where the strong players are emerging much more stronger, and some of the weak players will probably not survive this vicious cycle, which effectively means some of the stronger players, for example, Indian Hotels, when you refer to, when they exit this crisis or when the economies do normalize, they'll exit the crisis in a relatively much stronger position than where they were when they entered the crisis, because a lot of these weaker players would not have survived the crisis. So we're extremely bullish on hotels as a sector, and I think Indian Hotels presents a very compelling investment case in our framework from a 2 to 3 year time frame.
That's the view coming in on Indian Hotels. Meantime, Kunal, let's take a look as to which are some of the buzzers within the broader markets this afternoon, because you've got that buoyancy that can be witnessed within the mid and the small caps today. Praj Industries doing very well. Canfin, we just flagged off Lemon Tree. Quest as well as in the green. Sale, Rain Industries, Jain Irrigation, Future Lifestyle, as well as something like a Hudson Agro are active in today's trading session. What's the outlook when it comes to the entire pharma basket, and how are you looking at names within this space, Kunal? Given that what we've seen play out with Cadila, there is some interest in Dr. Reddy's and GSK as well.
So I think it's a very interesting question. Awan, what typically happens is that yes, the pharma stocks have gone through a very strong degree of momentum in last 4-5 weeks. I think if I'm not wrong, from the March beginning, somewhere in the March beginning, first week odd, I think you saw the pharma index making a bottoming out formation. In fact, the index was, I think if I'm not wrong, just struggling below the 200-day moving average, and from there on you saw a strong recovery led by many of these pharma stocks, specifically the large cap names. Cipla did exceptionally well. Dr. Reddy managed to pick up more than 10-12% from its recent swing lows, and similar was the case with so many of these other stocks, Glenmark, Cadila, etc. But typically what happens is that the market moves into phases of sector rotation. Now, in the month of March, there was extremely strong optimism in the market, but you saw the sudden tilt and shift towards defensives, and eventually the markets cracked down, and you saw the index struggling to hold that 15,400 mark on the Nifty, and we saw the index falling by at least 1,200 points in that 1.5 months time frame. Now, I think the risk reward is in favor of the high beta stocks and high beta sector yet again. So bank Nifty, banking stocks, the insurance space looking quite strong, real estate stocks as well. Many of these stocks are looking robust. Now, in that kind of a scenario, I think it's difficult to expect that the pharma stocks would continue to do well or like what they did in the last 1.5 odd months. So the balancing act for the pharma stocks, I would sense, is sort of completed. And now the markets will probably get back into the risk on mode. It could be a matter of a week or so more. I think that's the duration which I would believe that the sector churn could probably get rotated once again. So I believe that many of these pharma stocks would probably be nearing their shorter term tops. And I believe profit booking levels at these levels should be the way to look at it, and probably a shift from the pharma stocks as well as the IT names towards the slightly high beta pockets. I think that should be a much more ideal trade given the market circumstances at these levels.
Okay. The other theme which is actually emerging is also aggregators. Unlisted as of now, but a lot of aggregators which are collecting corporate information and getting most corporate employees as well vaccinated. Pankaj, since you track the entire platform business very closely. You were the first ones to actually identify InfoEdge. Where is it that you think the sizable opportunity within the platform companies would emerge? Considering there are now newer needs, like I just mentioned, corporates who want to get their employees and their family members vaccinated, and a lot of these, aggregators are budding in the entire space.
Aisha, we're living in extremely interesting and challenging times. My view from the perspective I look at it, I think this coming wave of AI and machine learning is a tsunami in the making. No business will remain untouched by this wave. And I'm saying this with my experience of having seen the IT bull market as an IT analyst in the late 90s and the start of this decade. So I think in some form or other, every business will undergo massive transition and transformation, and there will be huge amount of disruption in traditional businesses which will be quicker to adapt to newer technologies will probably survive, but I'm sure there will be many who will not be able to do so. So when you talk about platforms, while using some of these platforms for vaccinations and so on will be I see them as a short-term opportunities which can be growth accelerator for some of these platforms over the next 12-18 months. But what really excites me is, when you look at things from a slightly more longer-term perspective, the kind of opportunities that exist there. While it's unlisted, I'm just saying I've started using Cred as a platform for the last few weeks, and now realize that Cred is trying to do something in the credit card space what Bajaj Finance did in the consumer finance space 10 years back, where they're trying to consolidate credit card spends and then use that as a leverage to negotiate with the vendors and the service providers or the product manufacturers. So I'm saying in each and every segment in the ecosystem that I look at, there's huge amount of disruption that's in the making. A lot of these or most of these companies are unlisted at this point of time, but I'm very sure over the next 5 or 7 years, all of these companies will get listed and will create probably a very large internet economy in India. Probably India's internet economy probably should be the second or the third largest in the world after US and China.
Interesting insight there, Pankaj. Stay with us. Lots more to talk about. We have a breaking story coming up on a large cap company as well, and I would want you to react to that. Kunal, I'm going to let you go. We're going to take a very quick break. Come right back with the breaking news.